It is 9:45 at night, and I hope you guys had a damn good trading day today. I'm hella late with getting this video did to get it up, but I wanted to kind of go over real quick a trade that I did on SPY. Um, had a 111% return on it. Okay, and another reason I wanted to make this video was to talk about a. So one of my students texted me and was just basically like, can you help create trading strategies? And I'm not really set on like, okay, I'm gonna show you a trading strategy and say just stick to that and use it. Because the trading strategy that you use all depends on you as a trader. Okay. You have to kind of explore different trading strategies to find the one that works for you. And the ones that don't work for you, the ones that you don't like, the one that you do like. It's all up to you. Now, me personally, I trade, formation, different patterns, double top, double bottoms, tweezers. It just all depends on the time frame, how long I'm looking to be in the play, the conditions of the play, the market, all of that stuff. It's a lot of different things you kind of want to take into consideration. Now, there are some times where you can just stick to your one trading strategy and you only trade that particular strategy. Now, me, I do that more than I do anything else. Okay. Um, I've gotten to a point where I'm not hopping around different strategies too often, but I'm also at a point where I understand different strategies, different setups, and things like that. But that doesn't mean you have to go in overcomplicate it and use that every single time. Okay, so I want to look at one real quick to show you guys. It's simple. It was, clear, and it was a matter of knowing when to get the hell out, take your profit, and move on to the next thing. Because that's one of the biggest things that we struggle with is we get into a play, it's going good. We fuck around and say, I feel like it can keep going. I feel like it's going to push down some more, and then it reverses on us and we lose the entire play when we was in profit. Okay, and I was set on a particular level on SPY, and I was like, we done broke this pivot, this mid ground that I was waiting for it to break. Now if it holds there, then we can continue to push down because it's now below this particular level. And so it did push down there, but it did not hold above it. It did not hold below it. Okay, gotta pay attention to those wicks. All right. So if I had decided to stay in that play and just, continue to see if it was going to hit that level when I was already in a good amount of profit, I would have easily lost it because it literally shot back up. Okay. So I'm going to take you guys over to the charts and show you guys exactly what it was. It's simple. It ain't nothing overcomplicated. And how to just kind of find the levels when you are looking for your entry, where you should probably exit at, and just things like that to pay attention to when you're on the charts. Okay, so I'm on the S&P 500 and I am currently on the 5 minute time frame. Okay, so where I got into this play, what I was waiting for was for it to hit back up. Now these supply and demand zone up here, they move. Okay, so earlier, as you guys can see over here, SPY pushed all the way up here to this 555 level, which I was expecting to take place. Now we did push back below where I entered into my position. So this play was not very long, but it was what 45 minutes to when I got in, and it was 111% profit. Now let me show you guys what I was looking at. This level right here, which is 549, was where I was looking to exit. Okay, you look for levels where there are consistent bounces or levels that acts as level of support, and you can use that as your entry and your exit. Now, for me, I was in a put on SPY. Okay, I entered up here on this candle. Once this happened, once it did not break above this, I let this next candle here go and I got it in here, right? So we begin to push down. Now, you see this little midpoint right here? Initially, I was looking at this as my exit because this is where bounces could potentially take place and it can act as a support level. As you guys can see here, it can act as a support and begin to push back up. But when it breaks below it, there's a good chance that it will begin pushing back down to that lower level or a lower level of support. All right. So I got in here, and once this right here, this candle here formed, Okay, these wicks here lets me know that every time the bears try to get there, the bulls snap it back up. It happened again. Not It's a little bit shorter here, but it happened again. So once you start seeing these wicks takes place and it starts to begin to push up and those bodies are getting smaller and smaller up to the upside, more than likely we could potentially see this thing begin to go back up. Now, I will say this, originally my SPY play was up 138% when we were down here. But by the time I got out, it was 111% because I was looking to see that it closed below this white line right here. And it did, but it did not last as long for me to say, okay, now that we've closed below that, I have my next target here at 549. So that's where I'm going to exit at. That's one of the things is that just because we have a level in mind, that does not mean that we just stick around and just see and hope that it hits that level, because sometimes it may not. Read what the charts and the candles are telling you to let you know whether or not there's a chance it will push to that lower level, or it will potentially move sideways. It could potentially consolidate, especially when it gets to that level right there. Well, when it gets to this little level here, this is a supply and demand indicator that I have here. Okay, so this level here, breaking it above or below, sometimes the price can begin to move sideways or consolidate a little bit, and then another breakout take place. This happened very briefly, 5, 10, 15, 20, 25 minutes, and then look what happened. It started pushing back up. So you don't want to overstay your welcome just because you're hoping that it hits your level. I was damn good okay with 111% profit, and so I got on out of that play. And if I had not, look what happened. It broke where I entered. This was originally a little level of support, I mean, a resistance up here, okay? And it broke it, and look what happened. We pushed all the way up here to this 555, and it eventually came back down after the market closed. I was in a zero DTE SPY play. Now, I usually go to the next day or 2 days when I do my SPY, mostly because when I trade SPY, mostly because I try to get my theta a little bit lower. And then just in case, I'm not set on holding SPY over until the next day. But if it ever just happened to say, okay, I'm going to hold this thing out to the next day, give it a chance to kind of, remake a move that I may have messed up, then okay. And usually when I do that, it does work, but I'm still just not set on doing that too often. But I did a zero DTE. So even if this is where I got in and it got back down here, that theta would have ate away at my profits, because pushing this high up from my entry here and then eventually making its way back down, even coming back here would not have brought me back in the green. I more than likely would have still been at a loss because the theta was eating away at my premium, it ate away at that profit, and more than likely the delta may be a little bit lower than it was. Okay, so all of this right here was just premium burn had I not got out of that play when I did. So using support and resistance, using supply and demand to make your entries and make your exit is a very, very simple strategy that you can just use. Like, it doesn't have to be a massive amount of indicators on your charts. It doesn't have to be, all of these complicated and over complex setups to trade with. You can keep that shit simple. Support and resistance, as long as you know when to get out of the damn play and don't let it get away from you, it could be a damn good trade. Okay. So when you see heavy levels of resistance, okay, let me change my when you see heavy levels of resistance, okay, or heavy levels of support, the main thing with this is timing your entry, waiting for it to get back to a certain level before you make your move. Okay, if you have the patience to wait till you get back to that level, whether, let's just say I was waiting for it to get back to 555. Okay, we were all down here. It's plenty of indications to say that we could have pushed lower, but you gotta let things play out. Once you have your mind set on a level, sometimes you just have to be okay with that level potentially needing to change. All right. So I got in, I got out, and I did let that candle kind of form, because once we got below that little mid round, I said, okay, we could potentially go down further. And nothing, once it starts showing me that, okay, we probably began to push back up, then I can't really keep my mind set on that lower level right now and secure my profits. Now, if you have runners, that may be cool. But even if I had a runner, we pushed that high up, I still would have made my profit from maybe that first one, but then it would just been an unnecessary losing the rest of it by letting it go that high up. Okay, so you got to know when to get out. You got to know when to take your profit, and you got to know when to not overstay your welcome. Okay, so any setup could work. It just depends on you as a trader. Depends on how aggressive you're trying to go with this thing. But if you're someone who just want to keep it simple, because trading could be damn simple. It does not have to be this, trigonometry math problem. I know trading is math, it's numbers, yeah, but there are ways to simplify it. Okay, don't let no one just make you feel like because they know this overcomplicated ass method for trading or these setups that what you're doing is not enough, because you can make damn good money just keeping it simple with one or two indicators versus someone with 5, 10, 15. We are not managing no 10, 15, 20, $50 million hedge fund right now. Okay, we're not doing that type of trading right now or yet. All right, if that's what your goal is, then go for it. But that's not what this is at the moment. So it's okay to keep this shit simple. Stop overcomplicating this. All right. So this right here is a supply and demand support resistance play. And this little yellow line here is my 20 EMA. And there's just a smoother line right here. But that's all it is, okay? That is all that it is. That particular play was good play, great entry. You can use, and by the way, I'm on TradingView. I use Webull to trade, but over here on TradingView, I am just using it to chart. But the only thing with TradingView, I don't have a paid account. So the thing with TradingView, you can only have two indicators when you're on a free account. That's why I mostly use my Webull and my Moomoo charts, because all of the indicators that you want to use, whether you want to swap between or have a few up at the moment, you can do that. Okay, it's free. But with TradingView, you have to pay for multiple, have more than two indicators. So I did come over here to use just one to do the play, entered it on Webull, and then just did it like that. But this is TradingView. You can use any charts. I think Robinhood, yeah, Robinhood got their what is it called? Robinhood Legend. It's a desktop version that you can use as well. So if you don't want to have to pay for like any subscriptions on your charting, then use a platform that you're trading on. Use their chartings. Okay. Robinhood Legend, which is the desktop version, or of course you can use the app, but you'll get better viewing on the desktop for Robinhood. And then you got Webull, then you have Moomoo, and you have Moomoo NX. Okay, so there's a couple of them, but it's just some that you can use if you feel like you want more indicators or you don't want to pay a subscription. Then you don't have to use TradingView. But overall, TradingView is free. Just can't add more than two indicators. So that's all that is with that. So yeah, so that was my play. Episode 3 of turning 100 into $1,000. That right there, that play is still going. As you guys know how we did it, where I wanted to show you guys what it looked like going out of the money. As of right now, this shit ain't looking too good, but hey, we do have it until Friday. It expires on Friday, so that's the only thing with that. And quite honest with you, I'm looking at cutting the losses there, because initially I just did it to show you guys what it looks like to go out of the money on a strike versus us going in the money. Okay, so we were at 317. That position costs $50. So yeah, so that's pretty much where that is. Palantir has been ranging between that 212, 215, but today it was sort of like 113. I'm sorry, it's been ranging between 112 and 115, but it was mostly 113, 114, 115 in that area today. So it didn't push too far down. So that's pretty much what that is on that. I traded this on my main account and not on the series account. So Spy was over there. And I just might do that day trade where, I say I wanted to build up our account before I do a day trade on the series account, but focus mostly on swings. So we'll get to that. But I just wanted to show you guys real quick that Spy play, and mainly with one of my students asking about a setup, pretty much just showing that. Okay, so define your levels. Go to higher time frames and mark where there were heavy bounces and heavy rejections. Okay, heavy rejections at the top and heavy bounces at the bottom for your support. Okay, so that lets you know potentially where it's going to go. If it's going to potentially reject that level and start pushing back down, or if it's going to bounce from this level and start pushing back up. The key is timing the entry, getting in, and then knowing when to get out. That, I hope you guys had an amazing Tuesday, and I hope you guys are ready for Wednesday. And whatever your plan is, stick to your plan, take your profit, and keep it simple.